8/27, 2012. Wonderful Monday morning at 9:46 a.m. Pacific Standard Time. We are just going to show you the FXI iShares, China 25 IDX. It's approaching a major calendar reversal again, and we're watching this because the thing about this particular ETF or iShares, it has a little bit of gauge of what's going on in China, and the Chinese led us up for many years in a row, and they were the ones that let us down. If you look at the composites over there, like the Shanghai, one of the things that we're going to cover on the FXI is that there is some rumors out. Well, it's not that it's rumors, but let me tell you what it is. It's the November 31 puts. That's calendar month November 31. And here is the put options that I'm talking about. So let's be specific. That's this contract right here. 79,000 contracts open interest on the put side. One of the things that I would like my MMTs to clearly understand is the very following, is I'm going to show this put chart on the FXI. It's November calendar 2012 31 put. However, here on Friday, which was 8/24 calendar 2012, they open at 60 cents. The high goes to 68 and the low was 60 by 68, and there was 74,000 contracts traded. What is very ironic, MMTs, is that on 8/31 after the close, you're going to get that China PMI data. Friday, August 31 is what you're going to get. And people have been barreling into these put options here on the FXI because the Chinese has been slowing down. Now, look, I'm referencing the FXI, okay, China 25 IDX here now. And it's had a 4-week reversal. It's got its support level here on the weekly at the half bar. Mathematically, it's going to hold that for now. But here is what I would like to tell my MMTs, is that there is a forward-looking story to all of this, because you see the Shanghai and all of those markets got clobbered overnight, and they're getting clobbered overnight. Now look at where the FXI was up here at the top when the Chinese were getting on board. But look at the kind of corrections that we've had over a period of time. Why is it very important? Because it told us something about what was going to happen. In 2008, we had a big financial crisis, but this started ahead of time. And over here, we're seeing lots of people buying puts, but we're seeing this growth contraction out of China, is that it's having its tolls here. And that, yes, you have that support level, but one thing I want you to know is that they're getting big right here, right now, MMTs. 74,000 of these traded. Now, the thing that I have a problem with it, when I put it in a level 2, and here is that weekly chart, so let me put that contract in a level 1 and 2, so that you can see it. Here it is right here, 73 by 76 pennies. These are not going to move much unless there's a very big directional movement. But my problem is I'm not wholesale to the market, because that's 70 by 72. And so in order for me to look at getting this type of transaction, that MMTs, these were down around that 44-cent handle area. Okay? And I've got a problem with 44 cents being below me because I'm at risk more. And here's the contracts traded right here. Here's the 74,000 volume traded. So people are expecting a huge move out of there. The open interest prior to that was only 19,886. And they were 54 by 54 across the board. Like I say, they don't have a lot of yield unless there's one big directional movement. So MMTs, when we do these kind of trades, what we look at doing is when they come down here, yeah, we got 100 contracts at 48 cents. And if we have to sell them at $1, well, we make some pretty decent money for this type of beta, dollar beta price option movement. in a FXI, okay, and using this ETF here to show you the references that if people are expecting this to go a lot lower between now and November 31st, there is support levels down here, MMTs. However, we always look at being very diversified in what we do. So once again, if it's another instrument that's going to pay us to the upside, providing that we're not going to pay 70 by 72 cents. No, no. And today's volume is only 56. It was just that one huge day, MMTs, that I want you to be mindful of, and that's 74,000 contracts that were purchased this last Friday ahead of that PMI number that the Chinese are going to release on 8/31. Once again, if we do drop down in here and we can get wholesale around 49 cents on 100 contracts, we would take a look at that level. But anything up in here is too retail for us, MMT, for the way they move. Our upside, so let's say we do sell off and break the lows over here and break this weekly support level and come down, challenge the lower end of that base across here where we were rallying up back over here in 2011 when it made its all-time highs right there, and bam. So we got a second calendar yearly reversal. What does this tell us about our forward-looking markets, possibly, in the U.S.? That's these indexes right here. And they're all overbought right now. We've rallied for the last couple of months almost, and we're going into September. And I'll be doing individual videos on why the S&P 500 will correct, why the NASDAQ comp will correct, so will the NASDAQ 100, and so will the Dow. It's not because there are reasons for that, and I'm not going to go into that. I'm going to conclude the $31 November put, 70 by 72 MMTs. We're going to be on lookout. Look, if this thing does break down and want to break these lows, which it could, if they're already showing, their economies over there have shown a huge decline in their productivity.